Hey guys, I'm back for another episode of Jack of All Trades. I'm here by myself because David's off doing some photo shoots. So I'll get right into it here. Sam, if you wouldn't mind pulling up this article that I saw come out last week, I thought was kind of interesting. So it says here stock funds took in more cash in 2021 than the last 2 decades combined. There's a couple different things I kind of want to go over on this. Like the stock market always has kind of had like this stigma around it where it's like, if you tell people I invest in the stock market, they think like, oh, okay, like that's cool. You invest, you're like Warren Buffett or whatever. But if you say like I trade stocks, it's kind of like, oh, okay, you like to gamble, right? So the reason I wanted to touch on this is because I wasn't obviously trading back in 99 because I was like 8 years old or whatever, but from what I've gathered from watching interviews of guys that were trading and stuff back then, it was kind of like the same sort of stigma that it is right now. Like, I mean, like right now, anybody who's walking around and stuff like that, you can pretty much talk to anybody and they know about DWAC, they know about AMC, they know about CEI. Like, everybody's just kind of like involved in all the hype. Whereas like 2-3 years ago, like when I was first getting into trading, like nobody really even knew what it was. So it's not really like a tech boom thing, like where like we're all connected now, so everybody's seeing the markets. It's more so just kind of like because of COVID. I think everybody's just been at home and it's just kind of like spread like wildfire. So the reason I'm comparing it kind of like to the dot-com bubble is because that was the last time where we had like so many big runners in the stock. Like all these little stocks just kept going up and up and up. So you talk to people now and it's like, oh yeah, everybody has a story like, a friend of a friend who made $1 million and a friend of a friend who lost everything and someone else who mortgaged their house and then they made money and then they thought they could make more and then they lost it. So like the reason I wanted to talk about all this stuff is because the bottom line is that like when you're looking at the stock market, there's two ways you can look at it, right? You can trade the stock market or you can invest in the stock market. So if you're an investor, like what you're doing is you're basically looking at really good solid companies that have, a 10, 15, 20-year outlook where you think they're going to keep growing as a company and you put your money there to improve your investment. So the way that I look at it, anything that I'm buying long term like that, I basically think of it as real estate where like you just don't think of it as accessible. Like when I buy a company for the long haul, I'm buying it as if I'm buying a house. Like it's not liquid money. Like yes, I could sell it at any time, but I basically written that money off. I just put it away. I don't look at it. I just let it grow and do its thing. It's the same as the housing market, right? The housing market goes up and down. You could buy your house today and then 2 years from now it might be worth less than what you paid for it, but you're living there for 10 years. So 10 years later, by the time you actually sell it, you've made a whole bunch of money, right? It's the exact same thing. Whereas like if you're in the stock market, you can look at the quotes every day. So you can be like, oh, I'm down, I'm down, I'm down for 2 years. And then you're panicking and you're panicking. And then eventually it comes back up. So you need to kind of think of them separately. And then when you look at trading, it becomes kind of this thing where people always say like, oh yeah, you're a trader. Like, you're like, you must like to gamble and this and that. Or like, how can you make money? You can't make money all the time. And then, excuse me, you look at guys like, there's guys all across the board that have made tons of money trading. Jesse Livermore is probably, the OG guy from back in the 1920s, Reminiscence of a Stock Trader. Anybody who hasn't read that, I highly recommend it. Really interesting book about him. But we have guys, like there's the Market Wizards book. That's a great book as well. You got guys like Ed Seykota, William O'Neill are in that. And then, you move up to today and you have guys that are, running prop funds, like guys like Mike Bellafiore. Like he's running a prop fund. He's a day trader. So there's all different ranges. You can trade over years, you can trade over months, you can trade over weeks, you can trade over days, you can trade over seconds, right? But at the end of the day, it's just because since the stock market is so easily accessible to everybody, like, I see these advertisements for, Wealthsimple or Robinhood, and it's like, it's the most generic millennial looking person saying like, oh, how do I invest in the stock market? And then they do this garbage commercial where it says, it's easy, start trading today and make money tomorrow. It's like, that's the way that these things are portrayed. So it kind of gets this like negative stigma around it. But when you really look at it, like logically, I mean, there is all these guys that make a living off this. So what's the reason that these people can make a living and make money every day and other people can't? well, like the bottom line is just comes down to work. How much studying you're willing to do, how much work you're willing to put in. Like this is a profession. It's a business. It's one of those things where you can make enough money to live off of, or very comfortably supplement your income. So you have all these people that think, oh, I'm just gonna, I saw this thing on the news, so I'm just gonna buy this company. And it's like, well, at that point, it's too late, right? Like that's when you should be looking to sell or to short it, right? Like once everybody knows about it, it's like the play is already gone. So what you need to do is just put your time into studying. I mean, it took me 4 years to start making money in the stock market. I think it took David about the same. And we lost a whole ton of money leading up to that point, just making losses, stupid mistakes, learning, paying tuition. If you think about any other job, I mean, you wouldn't, like, if you were going to school to be an engineer, like I graduated as an engineer, I can't go out onto a site. Like I can't walk out of my house right out of high school, walk onto a construction site and start, telling people where to go, what to do, how to build things, because I have no idea what I'm doing. Right? Like that's the same thing. It's no different than, walking into a casino. Like I don't know how to play poker. I've never played poker in my life, but I could walk in to a casino and I could throw $50,000 down on a hand, and I don't even know what I'm looking at. So I could just say, okay, great, throw my cards down, whatever, and then I lose all my money. And I'm thinking, well, how did this happen? It's like, well, because I don't know what I'm doing. It's the same thing with the stock market. Just because it's easy to get into doesn't mean that you're going to make money immediately, especially as a trader. So at the end of the day, what you have to do is treat it like a business. So how do you do that, right? How do you start? How do you level up? How do you graduate? How do you get to the point where, you have your degree and you can keep moving on? So the best way to do it, in my opinion, the way that I did it, is essentially you want to specialize in one specific area. So what I did, and David and I, we have different trading strategies and everything, but for me personally, what I did was I essentially put all my effort into individual individual patterns, individual setups at each time. So there was a period when I was trading, like when I first started trading, I was trading OTCs because that was, 4 years ago. It was right basically on the tail end of when they were semi-popular. They were already still dying. But there was enough action in them that I could still get some plays. I could still get some trades. So I learned how to read, I learned how to read level 2, learned how to read the tape. I was trying to figure all that stuff out. And that, honestly, I found that very simple. I was making pretty decent money, within my first few months of trading. And then they just slowly started to dry up. There was nothing. There was less and less and less. So that was back in 2017. And most of the penny stocks that were running were Bitcoin stocks, BITCF, GBTC back then even was an OTC stock. So all those kind of things were great because the way that they operated were just so simple. There was a lot less wiggle room, a lot less wiki stuff. They just flowed really smoothly. So once you learn how to read level 2, you can see the order flow, and it becomes, for me anyways, it became very simple to see when things were going to go up and when things were going to go down. But what happened is that market kind of dried up. So I was like, okay, well, I'm going to have to figure out the next thing then, because I had to go over to NASDAQs and, listed stocks. So what I started doing is I was just trying to trade everything. I was just gambling. I was thinking, oh, okay, this, this stock's going up, so I'll just buy it. And then I lost money. And then, well, this one's going down, so I'll short it, and then I lost money. So it just became this vicious cycle where you're constantly losing money and you can't really figure out what's going on. So the process that takes the most time is figuring out what works for you. And when I say what works for you, I mean what works for you in terms of your availability to trade, your mindset, your risk tolerance, your stress levels. All these things come into play because, people that are very, if you find yourself really anxious, really stressed out all the time, maybe you should look for longer term plays. If you're really quick and you're, really sharp and all this kind of stuff, and, you can make decisions really quick on the fly, maybe you should look at shorter term plays. That's just an example. Everybody's different, but it has to suit your personality. So like for me, it took me 4 years to find out what would suit my personality, 3.5, 4 years, whatever it was. So I went through different stages. I would find setup. So I would, you go online, you say, okay, there's this specific, bull flag setup or head and shoulders or whatever it is. And then I'd start looking for them. I'd say, okay, like let's try and find these patterns. And then you always kind of find yourself, like I did anyways, you kind of find yourself getting pulled in different directions. So like, I'd be looking for these specific patterns. I'd see one and then I wouldn't see one the next day. Then I wouldn't see one the next day. And then I'd just be frustrated because I'm like, oh, I'm spending all this time studying. I'm not seeing anything. And then I try something else and then I lose money and then it kills my confidence. And it just becomes this vicious cycle. So the best way, ironically, because our program is called Jack of all trades, is essentially to be, a master of one. So what you want to do is just find one specific setup and just get as good as you possibly can at that setup to the point where you can basically do in your sleep. Now, whether that means you're trading every day, every week, every month, whatever your time frames are, is irrelevant. You just need to become really good at that one setup, because the biggest thing in trading is your mentality and your confidence level. So like if you're gonna make a trade and you're gonna lose money because it was a trade you shouldn't have taken, well, you're gonna wake up the next morning, you're gonna see a perfect setup, and you're probably gonna put on half the size that you usually would because you're all stressed out from yesterday and you're lost. So you're second guessing yourself. Whereas that was just a trade you shouldn't have taken. So, like I'm at the point now where like I've been very, very strict with myself for the past few months. And my trades now, like I can sit there, I put my orders out and then I just let them do their thing. And like when my orders fill, I mean, I know I'm going to make money. Like if it hits my orders, I'm going to make money. Like that's just the way that I feel now, because I know these patterns so well that I know that there's over a 90% chance I'm going to make money. And on the ones that don't, I know exactly the dollar value that I'm going to lose before I even get into it. So, I get into it and it's like, oh, okay, the most I'm going to lose is X amount of dollars if it goes against me. But then I know the next 10 trades are going to work out in my favor. So it becomes a lot less stressful. Like, you just do your work, you sit there, and it becomes boring. But the bottom line is that you can actually develop one of these systems that works all the time. So, when it kind of frustrates me when I hear people saying, oh, the stock market's gambling, oh, you're going to lose all your money. Like, oh yeah, like, oh, that's easy. Like, yeah, I know my buddy, you only make this much. Like, I know a guy who just bought his first stock and he made, $50,000 in a week. And it's like, okay, great, but he's going to lose it. Like, it might not be tomorrow, might not be the next day, it might not be next year. But I mean, that's the reality, guys. Like, the only people that are new that keep their money are people that, you make a big bet, say, you make a bunch of money, and then that's it. You just don't trade anymore. You take it out and you buy a house or something. But the guys that think, oh, okay, I made money, so like, well, here's another one. I'll just buy this other stock. Like, this is easy, right? Especially back to this article, when you look at stuff like this, when everything just goes up. I mean, you could buy anything, you could hold it, you could be down 50%, and then eventually it's going to come back up and you're going to make money. So what does that teach you? That teaches you that, okay, well, as long as I just keep holding these garbage companies, eventually I'm going to make money. Well, what happens when the market turns around? What happens when we go into a bear market, a sideways market? How are you going to survive, right? So that's why it's so important to have these systems, and your system can be whatever you need it to be. My system, I could teach someone my system in probably, half an hour, exactly how I trade, and they might lose money every time because they're not me. They don't know how to operate it perfectly, So like, that's what it comes down to. It's the operator, right? It's the same thing as, like, because I'm in construction again, obviously. Like, think about an excavator or a bulldozer. Like, I can put you in the machine and say, oh, okay, here's the levers. This makes the machine go forward. This makes it go backwards. This makes the arm go up. This makes the arm go down. And then, so the system. You know exactly how this machine operates. You know exactly what the controls do. But that doesn't mean you're going to be able to, build a skyscraper. That doesn't mean you're going to be able to dig a perfect hole, right? It comes down to the operator who's operating the system at the end of the day. So that's why everybody needs to find a system that works the best for themselves. So what you have to do is just put in the time and put in the effort. I mean, anybody that comes into this and thinks they're going to make money right away you're just wrong. I mean, it's just not going to happen. And you might make money right away, but you're not going to keep it. That's the thing. You're going to lose it. It's going to bleed out over time. So I've actually seen, like, it's funny. I've seen a couple of my closer friends, even just over this past year. Like I had a couple friends actually that they made more money than I did over a shorter period of time. And, they text me and they'd, send me these things and say, oh, this is so exciting. Like, man, like, did you see this? Did you see that? Like this one went up, 500%. And it's like, I look at it and I'm like, oh yeah, like I don't know that pattern. So I'm not looking at it. It's like, oh really? Like I'm in it and I'm making so much money. It's like, sorry, man, I don't know that one. I'm over here making, my 5% or whatever I'm making. And then, so I'm just coasting along, like slowly building my profit. And, they had these big wicks. And then here we are a year later, both of those guys have had massive losses, set themselves back. And it's just like, I'm here and they're way back down here or even below where they started. Right. So it's tough. Like it's really tough, especially when you're newer, because you don't want to miss out on the action. Right. Like one of the things that you have to remind yourself is the stock market's been around for like, decades and decades. So just because you missed the play today doesn't mean there's not going to be another one tomorrow or next week. You don't have to get every single play. But if you try to get every single play, that's when you're going to get yourself all stressed out and nervous and you're going to make stupid decisions. Like I'm at the point now where like if I feel myself getting emotional and I feel myself getting like antsy at the computer to like try and move my orders or change something, I'll just cancel it and walk away because I'm like, if I feel like this, I'm not going to make the right decision. Like I need to be able to sit down at my computer, heartbeat, just, totally relaxed and just sit there like a robot, like you just have to be like dead inside, basically. Nothing get you excited, nothing get you stressed, and you just have to trade like a robot. So if you find yourself getting excited, my advice would be just to step back and relax. Like, it's a good feeling when you're making money, but it's different when you're in the trade. Like you shouldn't be getting all excited and pushing yourself to make a trade just because you can. So, I think we'll probably wrap it up pretty much right here. Like that's just sort of what I wanted to go over, is just because I have heard so many people, like obviously this article kind of sums it up, but there has been so many people this year and last year that have made a lot of money, lost a lot of money. There's a lot of new traders out there. So I just wanted to give my 2 cents, which is basically just like, you have to respect the stock market. You have to treat it like you would treat any business, treat it like you would treat any profession. Take the time to learn. It's not something that you're really going to go to school for. It's something that you have to teach yourself for the most part. Yes, there's good education courses out there that can help you, but this isn't something where you sit down, like in a university class and you get marked on how you're doing, and then you get a degree and then you can get a job, right? Like it's all up to you. There's nobody that's pushing you to do this. There's nobody that's telling you to do this. If you're making losses, you can make a stupid decision that's going to cost you financially immediately. So it's just patience. It's the same thing as having patience in a trade. You have to have patience in the stock market, and you have to be able to make those decisions objectively based on your system. And you won't have a system until you've put in the years, the months or the years or however long it takes you to be able to act like that and make the right decisions. So anyways, thanks for tuning in, guys. I think David's going to do probably the next episode solo. So we'll see what he has to talk about, but catch you guys later.